Hello, this is Sage and welcome to the Economic Corner, where we update you on all the biggest economic announcements. So let's get started with the most important news of the day from the biggest economies in the world. And first up on the Economic Corner is a news that comes as a great sigh of relief. Israel and Hamas, the Palestinian militant group, have agreed to a ceasefire, and this brings end to an 11-day conflict that has killed at least 230 Palestinians and 12 Israelis. Israel's Prime Minister Benjamin Netanyahu initially resisted, saying he was determined to continue this operation until its aim is met. But after Israel's Security Cabinet met on Thursday, it said it had voted unanimously in favour of a mutual and unconditional Gaza ceasefire, and Hamas said that the fighting would cease at 2 a.m. local time on Friday. And moving on to the next important economic update, the Biden administration has signalled it will accept a 15% global maximum tax on large multinational companies, and the move is aimed at increasing revenues from corporations that operate across borders. The US plans for a tax regime overhaul, which was set out in April, which proposed applying a new tax based on sales in each country to the global profits of the very largest companies, including big US technology groups, regardless of their physical presence in a given country. Officials at the Treasury said they would continue to advocate for a global minimum tax at the highest rate possible, but that 15% should be the floor. And meanwhile, here is another move by the Biden government on the red-hot cryptocurrency market. Cryptocurrency transfers of more than $10,000 will have to be reported to US tax authorities under new Biden administration proposals. The US proposal came in a day after China signalled a regulatory crackdown of digital currencies. The move is part of a broad set of proposals aimed at curbing tax evasion. And the price of Bitcoin, the most actively traded cryptocurrency, fell 5% after the US announced its proposal. And both these moves by the Biden government aim at closing the tax gap, the difference between taxes owed to the US government and those actually paid. The move aims at investing nearly $80 billion in the IRS and expanding the Revenue Service's ability to identify wealthy individuals who avoid paying taxes owed. Next up is an important move from the UK. The European Parliament has signalled fierce opposition to advancing a market access treaty with China by declaring it frozen. The decision is a clear sign of mounting tensions between the bloc and Beijing. The decision got an overwhelming majority on Thursday, and this in response to the retaliatory sanctions imposed by Beijing on European parliamentarians, diplomats, academics and think tanks. Thursday's resolution was passed with 599 votes in favour, 30 against and 58 abstentions. And moving on to important data announcements for the day. The Australian Bureau of Statistics shared the most recent retail trade figures on Friday, as per which the retail sales in the country has risen by 1.1% in the month of April. Other key highlights of the data are that the turnover rose 25.1% when compared to April 2020. The rise in retail was led by food retailing by 1.5%. Cafes, restaurants and takeaway food services gained 2.5%. Statewise, New South Wales and Victoria saw rises of 2%, with turnover rising in all industries except department stores. And meanwhile, Australia's household sentiment retreated and employment fell for the first time in 7 months, which combined with a slow vaccine rollout increases pressure on the central bank to maintain a high tempo of stimulus. Consumer confidence slid 4.8% in May, though from a record high. The employers cut 30,600 roles in April. Yet other indicators remain positive. A survey showed the financial well-being of Australians climbed to the highest ever, and last week's budget contained new rounds of spending. Private sector growth in Australia remained strong in May, according to flash PMI data. And survey participants reflected that easing COVID-19 restrictions helped to boost confidence and supported demand in May. The rate of business activity expansion eased only slightly from that seen in April, when growth was the strongest since the survey began in May 2016. Demand continued to improve markedly, encouraging companies to hire additional workers at a survey record pace. Price measures remained elevated in May as input cost and output charge inflation both reached new records, easing from 58.9 in April to 58.1 in May. The IHS Markit Flash Australia Composite Output Index nevertheless printed its 9th consecutive month in expansion. The continued expansion of the private sector was supported by improved client confidence, buoyant market conditions, strengthening demand, the easing of COVID-19 restrictions, and low interest rates. Sharp increases in activity were recorded across both the manufacturing and service sectors. And on the other hand, the Canadian financial system continues to function well despite the COVID-19 pandemic. And Canada's financial institutions have proved to be resilient during the crisis. Unprecedented fiscal and monetary policy support has been instrumental in keeping the financial system functioning well. The pandemic has, however, highlighted concerns about market liquidity and two key household vulnerabilities: high household indebtedness and imbalances in the housing market have intensified over the past year. And these assessments came in from the Financial System Review of 2021. Before we get to the next latest news, it's time for a small break. Don't go anywhere. I'll be back in less than a minute to share some important developments from the US and the UK economies.
At Calkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. Calkine TV.
And welcome back to the Economic Corner after the short break. The Conference Board Leading Economic Index, or the LEI for the US, increased by 1.6% in April to 113.3, following a 1.3% increase in March and a 0.1% decline in February. With April's large monthly gain to start the second quarter, the US LEI has now recovered fully from its COVID-19 contraction, surpassing the index's previous peak, reached at the very onset of the global pandemic in January 2020. While employment and production have not recovered to their pre-pandemic levels yet, the US LEI suggests the economy's upward trend should continue and growth may even accelerate in the near term. The Conference Board now forecasts real GDP could grow around 8 to 9% annualised in the second quarter, with year-over-year economic growth reaching 6.4% for 2021. Now, For data from the UK, consumer sentiments in the UK increased further in May amid the easing of virus-related restrictions, regaining all the ground lost to the pandemic. And market research firm GfK's consumer confidence barometer came in at -9 in May, up 6 points from April, and matching the reading registered in March 2020 before confidence among British consumers plunged amid the virus-related lockdowns. After months at severely depressed levels, British consumers' mood improved quickly from February amid a swift COVID-19 vaccination campaign and the gradual implementation of the roadmap out of lockdowns. The rise in the headline index was driven by boosted economic expectations for the coming year, which increased 15 points. The measure has leapt from -44 in January to 4 in May. And the outlook for personal finances in the next year remained flat for the third consecutive month at 10 points, a 3-year high. Moving on to updates from the pandemic front. India is struck by yet another disaster in the rising second wave of the pandemic. There is a sharp rise in cases of black fungus in India, which has exposed the consequences of over-medication as doctors flout prescription guidelines and panicked patients self-medicate. The overprescription of steroids in particular to treat COVID-19 patients has been blamed for an explosion of fatal black fungus infections and a shortage of the drug to treat it. And doctors have reported a surge of patients suffering from black fungus or mucormycosis, an infection with a mortality rate of at least 50% that starts in the nose and quickly spreads to the eyes and brain. And experts have warned that administering too many steroids and other drugs could trigger secondary infections and antibiotic resistance in the country. And meanwhile, there are media reports that bank branches in Tokyo are seeing a flurry of pensioners trying to cash stimulus checks from Joe Biden after the US Internal Revenue Service sent thousands of payments to Japanese citizens in an apparent error. An official at one of Japan's biggest banks said the issue was causing crowding and confusion at some Tokyo area branches. The payments appeared to have been sent to Japanese retirees who had worked in the US, highlighting the enormous scale of Biden's $1.9 trillion stimulus and the risk of waste in the rush to get money out of the door. The IRS confirmed that non-resident aliens were not eligible and should send the checks back to an address in Austin, Texas. Thank you so much for joining us for our live shows this week on Kalkine TV. This is all from the Economic Corner. Keep watching Kalkine TV for more live market news and important updates. We'll be back next week on Monday, as close as possible to 10:30 a.m. with your global market roundup. This is Sage signing off.